Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, January 18th, 2019. I want to do a quick update on the internet content and information sector. Just recently, let's see when that was, I highlighted that a handful of stocks, about 2 dozen or so, that stood out to me as the attractive trading ops, and that was, where is it? Date is down here, January 8th, so really just 10 days ago. I want to update that primarily because I still really like this sector. Now, I'm doing the video for several reasons. I did put a short on QQQ today. QQQ is 60 or so percent technology stocks, and these are obviously tech stocks. It's a subsector of technology. So here's the thing: if I'm right on QQQ with a decent pullback, then these are going to go down. So first and foremost, I wanted to do this as a potential, they're still potential trade ops, and they may be objective long entries on pullback. Some are objective long entries now. The other thing is that I have been wrong before, will be wrong again. So if my, call for a pullback in QQQ, although I feel pretty strong on that, if that is wrong, these guys can continue to go. But the bottom line is they look very good, and there are times that the broad market pulls back or consolidates, and particular sectors or subsectors within the market continue to trend bullish or bearish. So there's a lot of reasons, and ultimately, of course, you may not share my views on the broad market. You may be here for looking for trade ideas. You do your own analysis. You have your own opinions on where the broad market is going. So again, I view my job as to share the best looking trade ideas and highlight objective entry and exit points on those. First one up, again, we're just going to go through the same list. I won't throw anything else in there. We'll just look at all these flag stocks right here are the ones I covered in that video, and then I did a follow-up on it recently. I'm going to start out in no particular order. I just sorted these. This is IQ. Let me turn the symbols up a little bit. Okay, there it is. Unless I say otherwise, we'll just stick with the daily charts. So IQ, clean breakout today. There's no two ways to slice it or dice it. That is a breakout. There's some impulsive. Volume looks pretty good. It is kissing the 50-day, but it's sliced through there once in a while. Now again, it's all about this is objective today. Personally, I'm not chasing it because I just, put on some pretty decent shorts, and larger than I have. Have quite a few unsuccessful unofficial short trades. I'll point out objective levels on, QQQ or whatever. But this one I put on as a swing trade, and I've even, for the first time in a while, put some on in self-directed IRAs, some SQQ, TZA. So I'm expecting a pullback, but that doesn't mean you need to pass. But I would like to buy a lot of these on a pullback in the next week or so. And again, here's a potential uptrend line. See if that breakout holds. If not, there's some support down here. Maybe this will prove to be a false breakout and it'll go. But either way, this one looks good. Now, I don't know if I gave price targets on this one last time, but there's also some horizontal resistance. I should cover that right now. So this one also kissed resistance today. If and when it clears that, let's look for maybe a run at this reaction high right there around 2164. And ultimately, if this rally can get some traction, maybe up here at about 24 and change, that's IQ. Next one up is WB. That one, same story. I believe I had mentioned you can buy it down here on this 54 12-ish or pullbacks to the 54 area. That's been a well-defined support level. This one's basing. That's a nice fat basing pattern right there. And so although we already broke out of the downtrend line, breakout, back test, and we've kind of been holding that 54-ish area, you want to see it pop impulsively above 65.50. I'm sorry, 63.50. So there are two objective areas to buy this one are pullbacks to that 54.12-ish level or a little bit above there, and or breakout above 63.50. Because that's a powerful basing pattern, there is certainly some resistance I can show you overhead, maybe a little bit around here. 67 some comes in, but I think it might be able to work its way up here, market willing. That's the important thing. Either I'm going to be right at this is a bear market rally or wrong. The market goes to new highs. This one should have no problem getting up here to 80.75. And so, however, if it is a bear market rally, bullish chart patterns have a much higher failure rate or may start to play out, but they're not going to play out to their measured target. But in a bull market, this is a pretty powerful pattern, and that should be a nice hold. And the thing about it, if you like the stock, but you're concerned if the market's going to take another leg down, Well, that's what stops are for. So if you buy it here, 54, you have a stop a little bit below. If you buy the breakout above 63.50, and it's not super well defined, I need to say that there's been quite a few pops above there. Let's say 67 if it continues to base. You buy it on the breakout or add to a position that you started in down here. Again, then you just you raise your stops, and it all depends on your average cost basis if you're scaling in or taking partial lots. WUBA58.com. Again, these are just beautiful patterns. Again, the sector stands out just like the cut and wood that I mentioned. This one was in this wedge at the time, I believe, bullish falling wedge, pull back, boom, there's an impulsive breakout. By impulsive, see the big green candle. First day wasn't much, next day impulsive move, another impulsive move up. These are the next two targets right here, 62.20 and 67.03. If the market comes back in and it causes this sector to come back in, then you might be able to position long on a back test of the downtrend line for a swing up there. And again, it depends where. I can't tell you where the stop would be right now because I don't know where the back test would be, but your stop would be somewhat below. And try to align your analysis with these individual stocks and your expectation with that of QQQ in the broad market as well. If you can align both those trades, they should work out better. What I mean by that, if QQQ pulls back and hits that, final swing target we have right now, at the same time this stock is back testing that trend line or some other support level, then that is an objective entry. Next one up, SNAP, SNAP. Nice falling wedge pattern, clean bullish divergence. PPO has run into the zero line from below, and it looks like it's curling down right now. But so far, it's a breakout, a near back test, and it's moving higher today. Of course, a lot of all these stocks are going to be up today. I'm not doing this video particularly because the market's up, but the fact that since I highlighted these, most of these stocks have broken out since then, and they look good. And they're just in the early stages of breaking out, so there may be more room to run. GRUB, Grubhub, just a nice looking chart here. You had a pretty well-defined support zone that this one fell to after a big correction and a divergent high. Very clean, well-defined, steep downtrend line, steep bullish falling wedge pattern. Looks like a little bit of an inverse head and shoulders bottoming pattern here. This is your left shoulder over here. This is your head, little right shoulder, boom, there it is. That's a bottoming pattern. And to calculate the measured move of an inverse head and shoulders bottoming pattern, you just take the distance up to the neckline, add that to where it breaks out, and that should bring you right around to my $95 target, which is just basically looking to come into the bottom of that gap. If it pops much above that, it may backfill the gap. So plenty of room to run, and it may not look like much on this chart, because there's such a big price swing here, but that'd be about a 16% gain if it got up to the 95 level. So there's one to watch. And again, to clarify, you're at resistance now. So it is not an objective long entry here, although this chart is constructive. Like I said, beautiful breakout back test. This price action is just textbook so far. But now you're at resistance. That's the neckline. And also horizontal resistance. So you want to see an impulsive break above 82.31. Maybe it needs to come back in a little bit, consolidate first. Maybe not. Who knows? You won't know until at least Tuesday. Remember, the markets are closed on Monday. But I think I can tell you I'd prefer to wait for a pullback and make sure everything's constructive. And look, maybe the IHS pattern is foiled. We come back down here to the 67-ish level again, which is support. And if QQQ falls to support at the same time, that'd be an objective level to step in long with a stop somewhat below. SINA, Sinacorp, nice downtrend line. It had a little, I mentioned last time, a little false breakout there. Sometimes you see that, but this is the real deal so far. Impulsive, bullish falling wedge, positive divergence, and you certainly have some resistance coming up here to the top of the target zone, but I favor a move up to at least that 67 level. And again, it's a pretty powerful chart. It could certainly do more than that, probably come up here to about 73 or so if this sector and the market continues to get some traction. YY, just again, all these charts are playing out just really nice. Clean downtrend line there. You got bullish falling wedge, positive divergence, Don't know where the divergence lines went on that one, but you can see breakout, you had a back test, one more chance to buy, and then boom, off to the races. That was, what did I say, the 8th we did that on. So where were we at that time? We were trying to zoom in on the candle. Was it this one right here? Yeah. So we were right on there. We had just broken out pretty much, and I'm trying to measure, just grab to the side of that candle. That's about a 15% rally in that one so far since the breakout. SOGO, same story. A lot of these patterns are similar, these falling wedge patterns. Breakout, back test, there it goes. Next one up. Oh, you probably want price targets. Well, ultimately, I think it can work its way up here, but it's not going to go straight up there. There's certainly some resistance here, about 651. So this would be the first target objective level to take profits. And again, if we get a pullback next week, maybe a back test of this trend line at lower levels here might offer us an objective long entry. SSTK, Shutterstock, let's see here, where were we? That's the 8th right about here. So this one's been continuing to advance since that last video. It's up about 7% or so, testing the 50-day right now. And again, strong bullish divergence. I need to add a horizontal level here for you. There is certainly some resistance here right about, give or take, about 37 or 39.17 or so. And then after that, your next resistance would be right here. Really nice target, very well-defined resistance level. I think that would work as a magnet if the stock can take that 50-day out. You have both the bottom of the gap right there, as well as a lot of reactions along that level as well. Another big gap right there. On a scale of 1 to 10, that's darn close to a 10 for resistance. And what happens is usually if you have a well-defined technicals like this, if they take that level out, a lot of eyes see that. You'd almost have to be blind not to see these levels on a chart. And so a lot of traders are going to watch them. The better defined these levels are, the more impulsive or the more likely it is to get a breakout, and a lot of traders will jump in. There is a it's self-fulfilling prophecy type component to technical analysis. I mean, there's also reasoning behind there. I can't get into there. It has to do with supply dynamics, where people have sold, stocks change hands. There's all a bunch of reasons why technical analysis works. But at the end of the day, the more simple a trend line or a pattern is, and of course, the more traders are in the stock. This isn't a mainstream stock, but I'm sure there's certainly plenty of traders out there watching it. So my point is, that's a logical target up there, and try to measure it out for you. If we pop 39.17. And go up to 41.75, that's about a 6-7% gain. And if we do enter the gap and backfill it, you're talking about a 12 or so percent gain. So let me just mark the top of that gap, which also has some reactions there as well. Shutterstock. TRUE, TrueCar, that one's also broken out since. It's been consolidating, trading sideways a little bit since then. You remember, a lot of the stocks and the market have had a pretty strong move off the lows. But still looking at 1057 or so, and then possibly potentially any of these targets. Right now, let's just say, with my expectations in the broad market and everything else, we get a thrust down soon. Might look something like this, and this would be my preferred final target. Again, that will all depend on where the market is, if and when TRUE starts to get there. In other words, if QQQ is then running up to my final target, swing target in the markets, where I'm looking for the next leg down, certainly that would be an area to book full profits, or at least tighten stops up if you decide to let it ride. OPRA, OPRA Limited, that's where it was highlighted right here, and to the highs today so far, it's rallied about 27%. Not much to say, just a big divergent low. It doesn't have a lot of trading history, but it's been moving up pretty nice so far. And this is one I don't see. It's a relatively new issue, so there's not a lot of levels to trade off of. Not a lot of resistance. With a stock like this, if you're in it, if you took it, just trail your stops up, let it ride. It's hard for me to tell you exactly where it's going to go, but if it does have a pullback now, I can tell you this. Let me add some lines here for an objective add-on or entry level. Right about here, there's some resistance and support right there, call it 7-ish level. and then worst case, move back down to 651 if you're willing to give it a little room to try to stay in the trade if you took it. I really want to see this one remain above 650. It's whippy. It may pierce that intraday, but you can see that was pretty decent support back here. Once it fell, it broke down. Looks like a cup and handle. Although cup and handle patterns are continuation patterns. They're bullish continuation patterns. This would be, well, the bottom part. It would be your cup. But again, this has been in a downtrend, but it takes the form of a cup and handle pattern, and it certainly is broken above that handle right there. FENG, Phoenix New Media Limited, another falling wedge, positive divergence, breakout backtest. Not much more to add to that other than the next target. First target, swing target would be up here, give or take. Let's call it a target zone between up to about 382 down to around 360-ish. And I like to take profits a little before the actual resistance level, but I think that's certainly a potential target. And if you look at the measured pattern, the widest part of the wedge, you add that to where the wedge breaks out, that gives you a much higher target. There it is. Zoomed out a little bit longer term for you. All right, next one, a few more to go. EVER, let's see, this one was highlighted back here. It's been steadily advancing since, up about 15% since it was highlighted in the video. Still shy of the first target at 651. And I'm not sure why I have that line there at 713, but let's just take that away. I don't see a lot of resistance there. But if it gets above there, technically speaking, the bottom of the gap is right here. However, there's only one candle. This is where the resistance is. So I think if it pops above 651, again, market willing, in other words, the broad market's in a strong uptrend, this one could potentially head on up here to about this 1160 level. That's where the top of the gap is. And that would be, from where we're at now, talking about 100% double on your money if it gets there. TZOO, Travel Zoo. Not sure. I had that one flagged, but it's kind of a sloppy chart. A lot of these annotations have moved since the last time I did the video. It is at resistance right now. It's just as well that I do these lines over. On the story on this one, by the way, you had a divergent high right there. That was a clear get out of Dodge, time when you could see, strong negative divergence building after such an extended run. And we are at resistance right now. I'm going to move away from this one. I know I highlighted it because I have it flagged, and maybe I saw something in that last video that I'm not seeing right now. Like I said, I'm recently, when I'm on my scratch board, I need to move the lines to another board. On TC2000, it's been moving my trend lines around and shifting on some of the stocks I'm using. So let's look at three more here. MARK, remarked media, divergent low, beautiful divergent low. Nice, continuing to rally so far. Let's see, that was, where were we on the 8th? We covered it right here. And so far, this one's up about 31% since then. And really don't see a lot in the way of it. I do see a trend line right here that we have to watch. So yeah, we're at trend line resistance. So if you took that one and you're up 30% or so, probably not a bad idea to take profits right here. That's what I would have done if I took this one. There's resistance right there also around 208. It's the bottom of the gap plus that reaction, plus this reaction, that reaction. So yeah, this one's got pretty significant resistance overhead. Now, if it can pop that, see, what I'd like to see this one do, ideally, come back in with the market. If the market comes back in here soon, build up a little energy, base a little, then break out above 208, and we might be able to run up there to about the 360-ish level. CCIH, again, these lines are just moving all over the place. Big support around $1. It's simple wash, rinse, repeat stuff. You trade a $1 stock, you're taking a high risk. This can drop below there. Any stock trading $1 could go away. This is only a $30 million market cap company, but simple wash, rinse, repeat stuff. Buy it on pullbacks to the $1 level. get a bounce. This might not look like much, but the last bounce off $1, which was the smallest in a while, it was about 16, 17%. Some of these bounces measured a lot more than that, 58 or so percent. And last but not least, MOXC, another, $27 million market cap, small company, but it was highlighted in the last video. Nice divergent low, popped today. It's up 102%. Congrats to those that took it. And right up to that, I believe that was the target I would have had on the last video, $1 share price. And that's a magic number too. These companies, they try to get their stock back above $1 when it falls below, so they don't face a delisting if they trade too long below there. If you were able to take that one, congratulations. I could tell you emphatically, if I did, I would have sold it at $1 or a little bit below there, and just moved on from this one. It can certainly come on up here at about the $2 level as well if it gets some traction. But I would expect it at the very least to do some consolidating first under that level before it pops, builds up the energy to double again. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.